Wow, the world's greatest investor, Warren Buffett, warns that the bank runs, bank failures are not over yet. So should you be worried? And what does this mean for Bitcoin and stocks and the crypto market? Warren Buffett is undisputed as the greatest investor of all time. And he's slamming these banks, saying that they're hiding their losses. And pretty much all of them have these losses. And he sold some of his banking stocks, which is a major big red flag for all of us. Because see, Warren Buffett is famous for owning bank stocks. See, his company, Berkshire Hathaway, has owned large bank stocks such as Wells Fargo, which is the third largest bank in the United States, for decades. He also owns Goldman Sachs and Ally Finance and lots of banking and finance stocks. And yet he's exiting. He's selling a lot of these stocks. He did it. He was very smart. He did it in May 2022. And he's still selling more right now. Usually, for a value investor like Warren Buffett, when bank stocks are crashing right now, if he feels it's safe, if he feels it's a good deal, he would be buying a lot more of it right now. But he's not buying. He doesn't think this crisis is over yet. He doesn't think this is value territory to buy it. He is still selling. Why is that? Well, because Warren Buffett knows that more bank failures are likely. See, right now everyone's calling this a bank run, but they're wrong. This is not a bank run situation we've got in the US and in Europe. It's what I would call a bank walk. A bank run is when somebody whispers and spreads bad rumors about a bank about to fail and everyone rushes in trying to take their money out. Even though it could not be true, it may not be true. It's just a bad rumor. That's a bank run. What we have right now is a bank walk. As in, no one's spreading bad rumors. People are just taking their money out in an orderly fashion. This is because, as we know, the Federal Reserve has been hiking and hiking and hiking rates. So think about it. If you put your money in a US or European bank, you're getting like what? 2% on your money. If you just take it out and you put it into US Treasury bonds, like 3 months Treasury bonds or 6 months US Treasury bonds, you're getting something like 5%, 5.1, 5.2% return interest on your money. Why would you keep it in a bank for 2 to 3% return, and it's not insured? If the bank goes down, then you lose your money, anything that's over $250,000 in the US. Instead, you put it in the bonds, you're making 5% plus on that. So of course, people are just doing that slowly and in orderly fashion. See this chart? This is bank deposits in US history, and look how much it has crashed. And it could get much worse because the Federal Reserve is still hiking rates. For now, the markets are still going up. I am still going long. But eventually, later in the year, I think a recession comes, and that's a big